Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 14 plus years. We're going to check in on the broader markets, a little bit of cooling off from Euphoria, a bit of an exhale. We'll see where the weakness was, where there's some pockets of relative strength. Cryptocurrency market had a flush right when stocks closed, a little bit of long liquidation going on there as well. Let's see where we stand on the charts. Just to note, a lot of what I'm going to talk about, I've been talking about on Twitter for days. It's very easy for me to just fire out little quick ideas as opposed to a big video and the time put into that. So if you're not following us at Chart Guys on Twitter, definitely worthwhile as far as more time pertinent or time sensitive information. So the S&P 500 futures chart, daily consolidation underway. It was definitely a bear day out there. But again, we zoom out and say, are there any red flags here? And the answer is absolutely not at this point. Really, that's the last clear support level for me. There's a couple little levels along the way, but this consolidation is inevitable. We've just been having this slow grind up, and we know those slow grinds have to end a certain way, and the bulls are just hoping that it doesn't turn into this kind of magnitude. Because back in the summer, we had this same all bull complacency, full control, and it shifted pretty drastically. But no red flags on a one-day pullback. We would need to see all major sectors hitting the lows together for days for that to happen. And we didn't even see that today. So keeping an eye on previous resistance, now support. That's going to align with daily EMA 12. Is this a potential rising wedge? I wouldn't call it a rising wedge because for me, by definition, a rising wedge has to lack follow through on any resistance breaks. There's a resistance line to be keeping an eye on, absolutely. But as far as, an uptrending support line that's not really in play, again, worth keeping an eye on. Can't hurt, right? But just make the bears prove it because we've seen plenty of times in bull markets where rising wedges can break bull. NASDAQ, a bit weaker today. So pullback hasn't even started. We didn't even break the low of Friday. And one thing that was going on today was some rotation. And again, rotation, but we had weakness in names like Meta. Meta and Netflix were leading the way down. Again, you look at Meta. Is this a red flag? Absolutely not at this point. Bulls want to hope to ideally hold this back test to this resistance zone as support. But it was interesting to see Apple completely ignoring, look at that, Apple candle, all-time high blue sky breakout, completely ignoring NASDAQ weakness, and Microsoft doing a real good job ignoring it as well. So this is Microsoft back testing its previous resistance zone, trying to hold its support, and that's a little bit of a confidence booster. We know the NASDAQ isn't going to drop too meaningfully if Apple is ripping to all-time highs and Microsoft is green. But there were some red flags. We can take note of where we stand emotionally, and it can be a bit of an indicator. So started the day today with Euphoria. I started the week, had Euphoria 20 minutes into the trading week, which to me was standing out as, okay, be a little cautious because then these were the positions that I had opened. So Euphoria 20 minutes into the week, pumping the brakes a bit. My reaction when I recognize feeling Euphoria, I take some profit and I pump the brakes. And so essentially I was saying, all right, not going to be as aggressive bull today. And it was because of a couple swing trades, ANF short, NVDA short, silver and Tesla long, nailed the quantum move from Friday afternoon into this morning. We'll go over that in just a bit. But I was feeling Euphoria. And look at how this indicator worked, 954. And at 954 on the day, what was the NASDAQ doing? We were right here. So essentially my Euphoria very quickly led into some significant market weakness in the short term. That said, there is a very clear support level on the NASDAQ futures to be watching here, and that's where we bounced from both in the morning and then at the end of the day. Look at this previous level, the only level nearby, and going to be keeping a close eye on this. That's from Thursday afternoon into Friday. And if it holds, we then have to keep an eye out for the possibility that it's a head and shoulders into midweek. And then we have data midweek, PPI and such. But short-term support test right now. And we were extreme. 15-minute RSI was in the teens. 5-minute RSI was almost single digits. as we were heading, no, it wasn't. It was teens. Heading down to that support test. So again, whenever I'm testing support or resistance, I want things as extended as possible to increase the probabilities that that support level can hold. And the NASDAQ was an example of that on the shorter term time frames on this drop this morning. Semiconductors, big question here is, can bulls confirm a daily uptrend? Again, we were watching this falling wedge type of pattern that broke bull, but we do still have to confirm that daily uptrend. So bulls need to shape up a daily higher low sooner rather than later. NVDA, same deal. Bearish news with China. It stood out Friday. Very clear, glaring relative weakness for NVDA on Friday, following through with the headline pre-market this morning. One of my major takeaways in 2024 with my trading is trying something where I know the most likely scenario, and I try and I'm wrong, and I try and I'm wrong, and I try and I'm wrong. And you might think, what are you doing? That doesn't sound like a good thing. But the key is, when I'm wrong, I'm stopping out break even, or I'm stopping out with tiny losses. And, I was thinking back to a Tesla swing trade that was one of my better trades on the year back here, knowing this tight range is going to break. 3-month equilibrium, higher low was most likely scenario for me. And so I tried 3 times and I stopped out break even, I think all 3 times. And then I finally got it. And so this one for me, I was looking at NVDA for a daily lower high as the most likely scenario. And I tried to short it Tuesday, Wednesday, or maybe just Wednesday and Thursday. I forget what, but I had 2 failures, break even, stop out, break even, stop out. On Friday, I had a stop out for a tiny loss and then finally got it when it rolled over and then made it worthwhile. But again, the only reason I keep trying is, number one, my thesis is not invalidated. A daily lower high is the most likely scenario from where we came from. And number two, I'm not racking up the losses while I keep trying the same thing. The only reason it's still on the table is because I'm doing a good job of managing my risk. Tesla, this swing is going well. All-time high test today, essentially. This is the bear's last stand for all-time highs. And we had this beautiful ascending triangle, bullish pattern. Again, broader market strength, Bitcoin all-time highs, Tesla has exposure, cozying up to Trump, but just higher lows, clear wall of resistance. Added to the swing position on this bull break, sold my aggressive ad on the Friday gap up, and still in my normal swing position that I grabbed from back here and holding for all-time highs. We'll see if we get daily consolidation. There's plenty of space for a higher low. Bulls had some nice bounce into the end of the day with some, Tesla Q news, $30,000 coming out in 2025 maybe. I don't even know, but it's a bullish chart. And all-time highs were knocking on the door. This is the bear's last stand. They've got nothing else to defend except for right there, the low 400s. ANF is a short I'm in. Just a beautiful equilibrium. And the lower high was the most likely scenario. So took a stab at it. My thesis was, if 164 is not the lower high, I'm wrong and I stop out. And in an ideal world, I'm holding this into 3-month consolidation, knowing that we just ran 1,000% plus straight up on the 3-month chart, but also aware we can very easily set another higher low and just keep tightening up within this equilibrium into January. But nice and comfy at this point. Really liked the follow through today for the bears and heading back towards our support zone. I love that clarity of that equilibrium. Quantum names. So this is where trading experience gets racked up. So I'm doing the same thing trading quantum stocks in 2024 that helped change my trading career in cannabis stocks 2017, 2018. The same thing is working 7 years later. How? It's human emotion. We're in Euphoria, and I know how to trade Euphoria cycles. And so when you have a breakout, penny stocks breaking out, and you have, the headline, sexy momentum, quantum computing, you have the broader market euphoria, and you have a 20, 30% green candle closing at the high of the day, you look for a gap up as the most likely scenario. And you take profit on that gap up. And so it was notable to me that, I mean, just look at the examples here where, this was a gap up that led to consolidation. No gap, no gap, gap up that leads to consolidation. No gap, no gap, no gap, gap up that leads to consolidation. It's a playbook that a lot of traders use. And so, where'd my thing go? So, Friday afternoon, quantum bulls like RGTI, QBTS want to see hourly bull flags form so we can close strong and look for the gap up Monday. A lot of the run is due to a conference this week, pricing it in my opinion. The harder we run before it, the more likely it's sell the news. If I'm a bull, I want a strong close, gap up Monday for profit taking, and then daily consolidation to cool off a bit into the actual conference. Now, it remains to be seen if we will get, the bears have to confirm an hourly downtrend tomorrow to start daily consolidation. Then we look for hourly oversold to mark a daily high or low. But I was a bit frustrated because I tried to market short at $5 right at the open, and my market order sat there for over a minute and didn't fill. And I had to cancel it because at that point, price is moving around. I want my fill right when I want my fill. It would have worked out really nice. I almost stopped trading for the day. I was so frustrated about that because, again, it did exactly what I thought it would. I thought we would gap up open and sell off hard. And I mean, the fact that my order not filling caused me to miss out on a 15% drop in 10 minutes, I'm PO'd. But I then know that the next page of the playbook is you scout the short-term back burners to try and mark an hourly high or low. And so I ended up getting, put my emotions behind me, got a really good fill, a penny off the low of the day, just looking at things being extreme. I would have scaled in another position, down in the 14s if we kept dropping. The 5-minute RSI was in the teens, and then just scaled out on the bounce and had some nice exits. Exit a third. I exited my last third in the 490s, just knowing that a lower high was the most likely scenario compared to the high of the day. But again, just can't stress enough how great these names are for trading with their liquidity, their volume, and their volatility. And again, the fact that they're just following the same playbook that helped, as a trader, I would say that I would label myself as a hype sector specialist. And seeing, these patterns play out time and time again is the reason for that. So QUBT is the weakest, one of the weaker names just because we haven't broken resistance yet. There it goes. Haven't broke resistance yet, so I'm just going to be treating this like a daily equilibrium. QBTS had dilution news. You've got to be cautious of dilution news on these penny stocks, but held up well, all things considered. Again, just tons of space for a daily high or low. I'm watching for daily consolidation and daily higher lows eventually. Financial sector lead bear, daily bear flag confirmed. Coming back to this previous battleground. And for me, the clear guide here is we've been holding weekly EMA 12 for 6 months. So keep it simple. If weekly EMA 12 is support, nothing changes. If we lose it, we could say something's different for the first time in 6+ months. So we're still well above that for now, but clear short-term weakness here for the financial sector. IWM still consolidating. We're looking for a weekly high or low with a lot of space for it to form, but as long as XLF is leading the way down, IWM is going to be weak as well. Healthcare needs to shape up an inverse head and shoulders. If anything's going to shift here, this is the daily chart. But not much going on. Again, the only thing that stood out to me today was XLF was not at the lows when XLF and QQQ were, so it's not your glaring bear flashing red light signal that we keep an eye out for. Dollar, healthy weekly consolidation at this point. Trying to set a weekly high or low. Clear daily downtrend. It's a bear break on the daily with no follow through at the moment. Gold got a bull break of its tightening range, but no follow through at the moment. Here's your 2-day. Need some more. Silver finally got over this wall of resistance. Little inverse head and shoulders. This wall right at 31.50. But got to be cautious because we can very easily form a weekly lower high on silver. I'm going to take some profit. I've been in this silver swing for a very long time. I don't even remember where I entered. But I'll probably take a third off just in case we set a weekly lower high. And natural gas, I'm finally interested in natural gas. So at the end of every year, I look at what's my biggest loser? What stock or what? And 2 years ago or 3 years ago, I don't even remember, it was natural gas. And I just haven't traded it since for years. And it's just been nothing but down. But I'm making my shot now. So my statement is this is UNG. This is either the weekly high or low at 1290 or I'm wrong. So I make an entry, I play off that level. We must confirm the weekly inverse head and shoulders to see the first bull cross of these EMA in years, to put in a longer term bottom. But, it's my smallest swing position size out of anything I have open right now. But giving it a stab. I was nice and disciplined, being hands off for literally years. But I would suggest everybody do that. Why would you want to trade the thing that gave you your biggest losses the prior year in the coming year? I think that's a good practice to do. All right, do good things. Hope you had a good day. Let's see how much consolidation follow through we get in the major indices. Loving the quantum volatility, Tesla volatility. And again, there's euphoria everywhere, and this is the market exhaling a bit. Look at crypto, as I mentioned, and we just flushed out a lot of leverage longs in crypto over the last couple of hours. A lot of these names are down 20 to 30%. So just again, the market, big inhale, just everything up, euphoria, exhale. We got to see weekly consolidation inevitably. And now it's just a question of how do bulls respond to the inevitable consolidation. And again, the crypto space in this is very different than what's going on in stocks right now, which is just barely starting some pullback. Not saying it's about to do this, but again, euphoria means pay extra attention. And I was feeling it in my bones this morning. See you next time.